you look at that result, the two real surprise on the upside were one, news media division, which houses all the Australian, UK, and US newspapers, and secondly, Wall Street Journal. So that's very interesting when you consider that the current environment, the big tech is taking a bit of hit, and you saw what happened to Facebook last week. So that in general was a very good result. The only low light that I saw was Foxtel, which I think it was just a prisoner of its own success because it had to cycle almost 80% earnings growth in the second quarter last year. So it was no surprise that earnings declined about 30% from that level. But still, all in all, a very good result, and momentum continues to build for that company.
Brian, revenge of the old school media, as you pointed out, can it be sustained though? Because we're seeing a long trend, which has basically been one direction, going to that technology side of the equation. Is this going to be a lasting turning point?
I personally don't believe so. That's why we think our intrinsic assessment of that company is currently below the stock price. And I think the key is on the cost side, because I think revenue is bouncing around as you expect, but it is that cost side, and whether they can hold on to all of those cost efficiencies that they were forced to take during the pandemic, and how much of that can they hold on to, and how much cost will come back as revenue comes back. So that's the key issue there. But let's step back and look at this company. I mean, you have to credit management for transforming that company. I mean, splitting out Dow Jones about 18 months ago to highlight the crown jewel of that group was a real key to the whole re-rating process of these shares. So I must say, fundamentally, this company looks a lot stronger than 18, 12, 24 months ago.